What's up, YouTube? It's the Action Figure Grader coming back to you with something a little bit different. GoCollect just released an article yesterday as of the making of this video, and they gave me permission to kind of talk about the article and feature the article in a video. So thank you so much to GoCollect for that. But I wanted to go over it in more detail. And basically the title of this video is How Do the Ultra Wealthy Invest in Collectibles? And GoCollect's article basically is tied to a Deloitte Consulting kind of research paper that looks at how billionaires like to invest in collectibles as part of their asset strategy. And while I don't think that really applies to any of you guys who are watching this, maybe it does. For me, I don't consider myself the ultra wealthy. I'm certainly not a billionaire, but I do think that there's some good lessons and some good overarching themes that you can apply to your own collection. And, I think that while the vast majority of the people who view my channel are like me in that we collect for the love of the collectibles themselves, our passion for Star Wars, for example. And while I think that the ultra wealthy do as well, but there is a certain asset class to this, especially when you start talking about very, very pricey items, okay? We talk about all the time the big whales over at Hakes Auctions or Heritage or Golden Auctions, some of these big auction houses, and the big, really expensive, rare, ultra high quality items that go for sometimes more money than we have personally. When a rocket firing FET goes for $200,000, that's a substantial amount of money, right? So you're getting beyond just collecting for collecting's sake. That's really, you're starting to talk about a big investment when you start talking about $200,000. And even for a billionaire, $200,000 is a lot of money, really. So let's go ahead and take a look at the article, and then I'm going to tie it back to some of the information that's in the actual Deloitte posting. And I think that I have an older copy of this Deloitte Consulting report. And then we'll tie it back to kind of how it applies to us as the peanut gallery, right? We're looking at how the other half live or the top 1% live, but how can we apply it to our own collecting? So here's the article, and I'll put a link in the video description. I encourage you guys to go check it out. It was written by Justin Davis, June 15th, which was yesterday. And the title of it is How Billionaires Invest in Collectibles, Insights from Deloitte Study. And Deloitte puts out, I guess, each year this study that's called Collectibles, an Integral Part of Wealth. And, I think that the vast majority of what's discussed in the research report doesn't really apply to us. We're talking classic cars, fine art, Monets and Picassos, expensive jewelry and handbags, things like that. But I do think that there is a Wall Streetification, so to speak, of the types of collectibles that you and I collect. There's, obviously graded action figures, but I think the big point that I want to make is that, CGC, the biggest and most trusted name in the grading of comic books, where GoCollect is known for, is the comic book industry. They were just purchased by Blackstone Group, which is a Wall Street fund, an investment fund with many billions of dollars in assets. So it's starting to infiltrate. We've talked about this in past videos. Wall Street and the big money is starting to infiltrate the types of collectibles that you and I buy. And AFA was just purchased by a big conglomerate. I'm sure that CAS and some of these other companies will probably follow suit. PSA, for example, for trading cards. So as collectibles mature as an industry, especially graded collectibles that have been certified and authenticated and graded in terms of condition, these high net worth individuals are going to continue to look at these as an alternative asset class and to kind of diversify their portfolio. And so the article does a great job of kind of summarizing the key points, and we're going to kind of talk about each of those in a little bit more detail. The insights of the ultra high net worth individual space is valuable for every investor, including us. We as collectors, whatever you collect, I think you can take some of this away from you. And it also kind of highlights maybe some of the pitfalls that we all fall into, especially if you're focused on only one particular brand or movie theme, in our case, Star Wars. And the first key finding is diversification of the portfolio. Billionaires understand the importance of diversification to mitigate risk and maximize returns. The study highlights that many billionaires allocate a portion of their investment portfolios to collectibles as a way to diversify beyond traditional assets, with traditional assets being real estate or stocks or bonds or investments in companies, things like that. And so I think that diversification is all well and good, but it kind of pulls you away from the passion part, right? If you're watching my channel, you have a passion for Star Wars. There's no doubt about it. And I think that we're all somewhat guilty in the fact that a big portion of our collectibles, our collection room, however much money you've put into your collection room, and as you can see, this is kind of one part of my collection room here. It's all Star Wars, right? And I do think that there is a certain risk that all of us Star Wars collectors take. That is Star Wars still going to be around as a popular brand in 20 or 30 or 40 years when a lot of us are dying off and a lot of this stuff gets sold? Well, if you're collecting Star Wars and that's all you collect, you're not really particularly worried about diversifying your collectibles portion of your asset portfolio, so to speak, beyond Star Wars. And you're not worried about how Star Wars collectibles are going to change in price. Do we all hope that stuff goes up in price and that we'll sell it for more than we bought it for? Yes. Is that something that most of you, including me, don't particularly worry about all that much? Yes. Yeah, I don't think that if you're watching my channel, you're not really, for the most part, buying these first and foremost as an investment vehicle. You're buying it first and foremost because you're like me and you're passionate about Star Wars and you like to build out your collection. So, we'll circle back to diversification right now, because here is the Credit Suisse / Deloitte article, and I'll put another link to this in the video description. But this is kind of a PDF file that's 72 pages long. And like I said, most of this is focused on fine wines, classic cars, wristwatches and jewelry, handbags, fine art is the big one. So it doesn't really apply in terms of the actual specific data that's in here, but the overarching themes I think are. And so first, talking about diversification, they had a survey for high net worth individuals. What percentage of the people who responded, and what portion of your assets do you think are in collectibles? And the 44% of respondents said 2 to 5% of their assets are in collectibles in terms of diversification. 15% and 16% answered 5 to 10% and more than 10%. So for if you look at a quarter of them, roughly, let's call it about 30% of them have between 5 and more than 10% of their total assets in collectibles. And I think what you'll find over time, especially as we talked about the Wall Streetification of comic books with CGC being bought by a Wall Street company, I think what you'll find is that this percentage is going to go up, especially if we head into a recession and the stock market and real estate and housing markets, all those kind of collapse. I think a lot of these high net worth individuals, they got a lot of money to play with, and they don't know where to put it. They don't want to put it in stocks because maybe they view the stock market as too risky right now. Maybe they don't want to put it in real estate because of interest rates and mortgage rates being so high that they think that the housing bubble, there might be a housing bubble and the housing prices are going to go down, which it may do, and already has to a certain extent. I think what you'll find is that during recessions, especially, or like events like COVID, this percentage will change and go up. I think it's going to go up either way, whether we have a boom economy or not, or boom stock market or not. I think that over time, our age group, as more of our age group becomes ultra wealthy, they're not going to be investing in fine wines or maybe in Rolex watches. They're going to be investing in comic books, and maybe that's a positive or very unlikely scenario, but kind of my hopeful and optimistic is the word I was looking for. Outlook as to how my age group, when we're 65 years old, and some of us are ultra millionaires or ultra billionaires, that they'll invest in comic books and action figures. Maybe that's probably wishful thinking, but I do think that there's a certain subset that where this between 2 and 5% versus more than 10%. I think this number of more than 10% is going to go up either way, no matter what the economy does. And here's another look at how the ultra wealthy like to diversify their portfolio. Property is a big one. Real estate, that's a big one for me. I would say that, 27% of people's portfolios that are ultra wealthy are in property. Mine's significantly more than that. Mine's probably more like half, if not higher, of my quote unquote net worth is tied in real estate properties, because I'm in real estate. That's what, so I'm a little bit different than maybe some of these guys that are running multinational corporations that are billionaires. But stocks make up 23%, bonds 17%. The interesting thing is cash is only 11%. I found that kind of interesting, given that billionaires, they have so much cash and they're making so much cash on an annual basis that it's clear that they're reinvesting it in other things in order to build more wealth. So I think that's something we can all take away from that, is that that number, I'm surprised it's not higher, to be honest with you, because if you're an ultra billionaire, if you're a billionaire and you only have 11% of your assets in cash, I'm a little surprised that it's not higher than that, just because once you're so wealthy to a certain extent, you don't really need to invest anymore. But these alpha dog, type alpha personalities, they're constantly reinvesting their cash into these types of things. And collectibles being at only 5%, again, I think that number is going to change and go up. Back to the article from GoCollect, the other big one says long-term investment horizon. That's a big thing that these ultra wealthy people like to do. They don't look at collectibles as a short-term investment. And, I think that has to be because to a certain extent, they're less liquid than stocks and bonds and things like that. You can go on the stock. If you go in stocks, you can go and sell it tomorrow. You can sell it in 5 minutes if you bought a stock yesterday. But with something like a Picasso that's many millions of dollars, or a Rolex watch, or even a very high-end comic book or high-end action figure, the market maybe is a little bit more limited for that. And at the end of the video, I'm going to show you an example of how limited the market is for these very, very pricey comic books, because one of them, the exact same book, sold 18 months apart, and it's pretty shocking, the price difference. But so they have to have a long-term horizon, mainly, and in my opinion, mainly because collectibles, there's a lot more kind of volatility in the values, as we'll show at the end of the video, but also they're less liquid asset. And it's a much more limited number of buyers for something like that. So while a Picasso is going to always continue to go up in value just due to rarity, certain assets, certain collectibles assets, it's a very limited market and they're very illiquid, and you got to find the right buyer for it. So I get that. Expert advice and research. This is a big one that I want to touch on here in a second. I think that with a lot of these assets, and this is a good example, I think the collectibles market in general has been opened up to the ultra wealthy especially since COVID, because the online auction houses that are highly trusted by these whales, they really took off. And this is a good example of that. So you can see how the classic car market has changed between 2010 to 2020. And obviously in 2020, we had COVID, right? And so everybody was locked down. Everybody was spending money like crazy online. And the ultra wealthy were no different, right? They couldn't go out. They couldn't go to restaurants, or they couldn't do their private jets to Tahiti. So a lot of these guys, they spent their money on auctions, and especially online. And this graph is really specifically geared towards classic car market auctions. But I think that this graph can really be applied to any collectible. And look at the difference in the number of auctions in terms of dollar volume that happened during COVID versus all those years before that. You're talking, somewhere between 50 and $100 million has been the historical norm, with higher numbers during boom economies. Well, during COVID, that number was triple. It was triple that. And that's true for really any collectible, right? The comic book market really had a massive boom where prices doubled and tripled in price. And Star Wars action figures were no different. Trading cards, whatever you collect. This chart is indicative of the entire collectible space. And I think what came out of this, obviously prices have come down somewhat depending on the collectible. But what really came out of COVID is the fact that the ultra wealthy started to really hit the auction houses harder. And so places like Golden Auctions or Heritage or Hakes it probably pulled in a lot of new ultra wealthy collectors that maybe have never bothered to look online, or they didn't have the time to look online. I think it opened their eyes that you can find a lot of really rare collectibles from trusted online auction houses. And now we see auction houses having too much stuff. Anecdotally, somebody at Hakes told a friend of mine that they are absolutely flooded with new submissions for future auctions. They have so much stuff that is being thrown their way to be listed online. Part of it might be because there's an inflection point in the economy and we're headed south. Job situations change, things like that. But I think part of it too is that a lot of these ultra wealthy who have these very, very expensive collectibles that are tailor-made for places like Golden and Heritage and Hakes, they now trust it because they've gone through it buying it during COVID. So I thought this was an interesting chart. And again, I think it can apply really to any kind of collectible out there. Quality and rarity will always endure. And what do we always talk about on my channel, specifically as it relates to high-grade action figures? Quality and rarity is always still, despite what we view as maybe a slight downturn in the vintage Star Wars market, graded and ungraded. If it's rare and it's high grade, it still sells for big money. And that's how the ultra wealthy look at it. So if you get something that's, a very, very rare and very, very high grade item, it will always endure and go through those. It'll make it through those recessions. It's almost recession proof to a certain extent. It may go down during a recession, but as soon as you have another boom economy, it's one of the first things to jump off the page in terms of new price highs because it's high quality. And if it's rare, people are going to want it, especially during boom times. So that's another thing that came out of it. Rarity and quality, again, we talked about that, but expert advice and research is the one I wanted to go back to. And here it is. So one of the big concerns that the ultra wealthy have, according to this Deloitte report, is that condition and authenticity are the most immediate risks that collectors need to assess, right? You don't want to buy a fake. And especially in the art market or wine market, there's lots of fakes out there. And, for someone like us, how can we apply this to our collecting? Well, the ultra wealthy in general, they're not spending their time submitting stuff to be graded. They don't have time for it. They don't want to fool with it. They'd rather buy it already graded, and that's why we see the crazy prices that we do at Hakes and Golden and everywhere else. So how can we apply it to ours? Well, that's what really the basis of my channel is taking rare stuff or high quality stuff, getting it graded, and then the hopes is whenever I go to resell some of it, it's been authenticated. The grade of it has been given by the grading company, and people know that they're buying something that has gone through the authentication process. So I just pulled up a couple examples. The first one is my Russian Oratet bootleg Bosk with the metallic orange. This is one of 2 or 3 that's known to exist, maybe 4 total. So this is probably like a pre-production sample. No one really knows. But to date, according to the bootleg group, this is maybe one of 4 or so known to exist. And the first thing I did when I got this is I got it graded because I wanted it authenticated. I wanted people to know that this metallic orange was not added after the fact. And so my hope is that whenever I do kill off and die, or whenever I've got to sell some of this stuff to pay for my kids' colleges, by spending the $60 or so to get it authenticated and graded, I've probably added some value to it versus what I paid for it ungraded. Another good example is all of those vintage collection miscards. How do you know that you're not buying a fake? And so here I've got my Jawa on the Sith Trooper card back that I bought on eBay for about $150. Well, I went ahead and got it graded from CAS. It came back with an 85 plus, and it says Sith Trooper / miscarded Jawa. So whoever buys this knows that it has been looked at, and this is not a re-glued blister and a fake. It's just another way for me to authenticate and show whoever eventually buys this that they're not buying a fake. This is a true factory error miscard. And so that's how we can really apply this concern for ultra wealthy to our collection, right? And that's really, like I told you, the basis of my channel is to buy stuff, get it graded, and hopefully along the way you've done some value added for it. So I just think that's an interesting point I wanted to make. The other big thing that I thought was an interesting concept that came out of this Deloitte research paper is the notion of being a caretaker rather than an owner. And I think that's an interesting concept. I'm not saying that that you have to agree with me on this, but in my opinion, I'm a temporary steward of my collection, right? Eventually, I'm not going to own this stuff. Eventually, I'm going to be dead. It's with 100% certainty that I'm not going to own this stuff forever. So to a certain extent, especially with some of my rare stuff, I'm nothing but a temporary steward, a caretaker for a lot of this very rare stuff. And one day, somebody else is going to be the next caretaker, and on down the line. And so I'm not saying you have to agree with me on this, and maybe you don't. While yes, right now I do own my collection, in a certain respect, I like that concept of being considered a temporary caretaker of my collection until eventually another caretaker takes over. I just thought that was a cool concept, and I had never thought of it that way. But anyway, I just thought it was really cool. The fifth point, and I think for most of us, if not a lot of these billionaires, this fifth point should really be number one, and that's the passion and enjoyment. Billionaires often have a genuine passion for the collectibles they invest in. While financial gain is a consideration, their interest extends beyond mere profit. And the study emphasizes that billionaires derive personal enjoyment from their collections, making the investment experience more fulfilling and rewarding. I would take that a step further and say that that's the number one thing, right? That for us, it's the number one thing as to why we do this. Why do we collect all of this plastic dolls or colored paper wrapped in acrylic cases, as in the case of graded comics? It's the passion for it, right? That's why we do it. And I would say that even these billionaires, to a certain extent, when only right now 2 to 5% of their assets are in collectibles, it's a passion. It's not a big investment vehicle for them if only 2 to 5% of their assets are in it. They're really doing it for the passion. And the investment portion of it, the potential profit to be made, that's just gravy. If we get a profit, great. If we don't, we don't. I know that I don't make a profit on everything I sell. Sometimes I do, sometimes I don't, and that's okay. But I think that fifth point really should be number one, in my opinion, because that's the whole reason we're in this ball game, right? But I thought this was a great article, and it was a good, interesting concept to kind of take a look at. But I wanted to show you something. The ultra wealthy are not immune from losing money on collectibles, okay? And I wanted to show you an example of this that's fairly recent. So I'm going to pull up this GoCollect of Superman #1. And why is this book important? It's the first self-titled series for Superman. Think about that. This is from June of 1939. It's the first self-titled comic book for Superman. It's also the first self-titled series for a comic book superhero ever. Think about how rare and how important this book is. This is the first self-titled superhero comic book ever, and the first self-titled series for Superman. It's not his first appearance. His first appearance is Action Comics, obviously. But one of these sold yesterday, and I wanted to show you how GoCollect breaks down their data, and it's really useful if you're a member on GoCollect. I'm a member of GoCollect's kind of like premium service, and I'd recommend that anyone who collects comic books join their service, because you can look up recent sales or past sales and how it breaks down by grade. And I want to pull up this one. This is a 7.0 CGC 7.0 for Superman #1. All right, and what's cool about this, there's only 2 of them on the census, and there's only one sale because the recent sale only happened yesterday, so it hasn't updated yet. But this sale in December of 2021, it sold for $2.6 million. And what I like about GoCollect is that you can actually pull up that sale. So you can pull it up, and then you can say verify sale, and if you click on that, it'll take you to this page, which is on Comic Connect. So on Comic Connect, this is what it sold for. There was 22 bids, and it sold for $2.6 million. 7.0 off-white pages, CGC graded. And that was the biggest number ever. Well, the interesting thing is yesterday, June 15th, this exact book, this exact one, not like the same grade. I'm talking about this exact book just sold again. And I think it was on Heritage, and it sold for about $900,000 less. So think about that. This was in December of 2021. 18 months later, the exact same item that someone paid $2.6 million for, they resold it and they lost $900,000 on that sale. So part of it maybe was a bad auction promotion experience. Part of it might have been the economy. Who knows? Who knows why it dropped so much? But I wanted to show you this because, you know, even the ultra wealthy, none of us, at least, you know, I can't, very few of us who are watching this video anyway, cannot afford a $2.6 million comic. We can afford an AFA 85 Han Solo for $250 and then maybe sell it for $230. But it's a pretty big drop to go from 2.6 million to about 1.8, I think was the number. So it was a loss of about $800,000 or $900,000 once you factor in buyer's premium and taxes and things like that. So just an interesting thing that I wanted to show you guys as it relates to how the ultra wealthy, how the other half live, how the big whales live. And there's big wild fluctuations in these prices, even for these really, really rare items. So anyway, I hope you got something out of this video. It's something a little different. I encourage you to go on to GoCollect and check it out. I'll put the link to not only GoCollect's article, but the Deloitte research paper. Mine's an older copy. I think it's from October of 2020, but I just wanted to pull some general concepts out. But I'll put a link to that as well in the video description. Thanks so much for watching, and I'll be back soon.